You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I'm long-term bullish on oil, as I do believe oil is going to make a new all-time high at some point. And I do mean all-time high where it goes above the 2008 top, which was around 147. So I am very bullish oil long-term. In the short run, I don't like it. I think it has to pull back more. I'll tell you what, though, this gets down to around the $50 level, scoop it up with both hands, and hold it for the long term.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, speaking today with our monthly check-in with Nick Santiago, master trader over at MiningStockEducation.com. Even though I'm not a trader, I like to get a trader's perspective on the market to see where the markets may be headed and to get traders' insights, because traders can really help with your entry and exit out of the certain stocks that you invest in. That's how I use this advice that I get from Nick on a monthly basis. So Nick, welcome back onto the show. Let's start with gold. What are your thoughts on gold? I've had some people on the show recently thinking that gold may pull back even under 1800.
Oh, I'm in the same camp. Right now, you'll see gold test around 1830 first. That's a daily chart support level. And then you have a big level around 1800. If you notice around 1800, that's where gold put in a very, very long base before breaking out ultimately above 1900, now pulling back. So we're going to probably test those two levels. Bigger picture, I think gold could be due for a much, much more steeper pullback. However, you have a war going on in Russia and Ukraine, and it's very hard and difficult to predict out in the future right now, because traders will just run into precious metals on any sign of an escalation there. And we all know it's, NATO's involvement. They've really gotten involved heavy now. So this thing is far from over, and that could be problematic for potentially the world. So traders might run into gold for that reason, but otherwise nothing has changed for me. I'm looking for gold to pull back. It exceeded my near-term upside, which was around 1875, 1880 by a little bit, and that was really war-induced. So now it's backing off. The dollar is starting to strengthen as well, and the dollar probably has put in a near-term bottom. So that's going to be a headwind for gold in the near term too.
What can you share about how the war cycle influences your trading?
I try to cycle that stuff out just to have a warning. And believe it or not, when the Russian-Ukraine event happened, I thought that would be over very quickly, and I was wrong. I thought it would end in weeks, if not maybe 2 months. And here we are, over a year in now. We're about a year in, and it's only gotten worse. And you've seen more money being poured into the Ukraine government, U.S. unlimited supplies. Where they have NATO countries giving weapons and aircraft and missiles, and so much. It's turning into where it's looking like we are getting closer to a potential World War III, and the cycles say that we're not that far off. You can see how these things develop, and this is one where I've never seen a country get canceled. I've never seen a lack of movement for peace. The West doesn't want peace. They just keep, pushing further. And it's looking, in my opinion, at least, that we're probably headed towards a much bigger escalation, in the next year or two. I just don't see this ending at all anymore.
And then what stocks would you go into if the war ramps up even further?
Well, the obvious stocks are the defense companies, right? The Lockheed Martins, the Northrop Grummans, the General Dynamics. They've all had big runs. So I wouldn't jump on them right away. I would wait for them to pull back of some sort. Then they're the obvious plays. But, the precious metals is going to be the big play. Silver is going to be the big play. Silver. And then, if gold gets down to that 1,500 handle, it's a no-brainer. It's a green light across the board. It's going to be the second coming of gold from 1999. I mean, it's just going to ramp up. So I'd love to see that pullback happen. I think that's still a very good possibility. And when that happens, I believe that now, looking at things that I've never liked to predict catalysts, Bill. I'm always just a chartist. I just go with the numbers. I go with the patterns that form. But I'm thinking that the war may be the catalyst for that big ramp up in gold that I ultimately expect, in the 1,500 handle. And same thing for silver. There's silver in every single thing that you own now. So, when you think about it, nothing operates without silver. So that's my favorite out of all of them. But gold will be my favorite come if it gets down to that 1500 handle, I don't care where it is in the 1500s now, with war going on, you could own it with both hands.
So as you know, gold often spikes with the geopolitical movements or issues, conflicts, but then it pulls back. So you never buy gold long-term for those reasons. But could you, if this is an upward trajectory that is sustained, but it's just triggered by essentially World War III, would that be because there's a loss of faith in currencies and high inflation and things like that drive people into gold permanently?
Yes, all of the above. And what will happen, and we're already seeing it, it's a lack of confidence in the country you live in, right? Nobody has any faith in these governments anymore. I'm number one on the list. I don't have any faith in this government. I mean, we look at the stuff that we're seeing: balloons flying overhead. They can travel from one continent to the other. NORAD don't see it. I mean, who knows what to believe anymore? This world is so upside down. It's so twisted. Nobody can make heads or tails out of it. And in that kind of environment, I want to own. I don't want anything but gold and silver or precious metal. So, we're going to see a lack of confidence in governments around the world. It's already begun. And, if you look at, some of these, whether it's the European Union, you look at Japan, even look at us. I mean, look at our debt now. Nobody even talks about this stuff. It's amazing how nobody even will talk about it. And I'm not a gold bug, Bill, because I tell you where I think the tops are in. I tell you when to get out. I say, hey, I'm not buying. I'm out of silver right now, right? That was my golden gem. I'm out of it. I'm not even in silver at the moment, but I will be soon. But I'm not in it at the moment. So I'm not one that just touts like a gold bug and says it only goes to the moon. No, these things are all tradable. And but when you lose faith in governments, people are going to want something tangible. They're going to want to hold oil. They're going to want to hold gold. They're going to want to hold silver, platinum. These things are all going to go a lot higher, natural gas included. And again, when everybody hates something in this world, that's when you have to look at it and say, hey, maybe this is on sale here, especially if this is something that still needs to be used. And all of the commodities that I just mentioned need to be used. And again, that's where we are. And it's just going to be a lack of faith in governments.
What about the 2 and 10-year treasuries? What are they speaking to you right now?
Well, we have a big inverted yield curve. That inverted yield curve has been in place for quite a while. I was probably one of the first people to talk about the 2-year treasury note yield. Most people didn't even hear about it. In fact, I get a lot of notes from my members saying, hey, everybody's talking about it on TV. You were the first guy to bring it to our attention. But any veteran trader that's been in this business for a while knows that's where the Fed funds rate needs to be. In fact, you don't even need a Federal Reserve if they just keep the Fed funds rate at the 2-year treasury note yield rate. And again, the 2-year now is above or right around 450. And if that goes up to 5%, which I think it will, you're going to see that the Fed has to continue to raise rates. They raise rates, debt service goes up. There's a lot of problems brewing. Enjoy this counter trend rally because that's all this thing is.
What about general equities? Are we continuing to see the stair step down bear market?
Yeah. Right now we've had what we call a zigzag up move, and that's after you had a 1-year move to the downside. So we're getting our counter trend zigzag up or ABC move, whatever you want to label it, however people like to look at it. It's basically a low, you go up, you consolidate with a higher low, and then you make another move up. That's about to conclude. That's almost over. And then we'll see downside again.
Copper? Are you following copper at all? Some people have said they're bearish copper, but
I'm one of them. So I have a put on Southern Copper Corp as we speak, and I'm basically in the money a little bit or flattish. But yes, I think copper is topped out for now. Ultimately, copper will be another big runner down the road. But at the moment, it is topped out. And I do believe that copper, in fact, I have it here around, the daily chart pullback will be around 385. Bigger picture, much lower.
What about oil? Oil had a nice bump on Friday.
Yeah, so oil is going to be turbulent here. I don't love the pattern that oil makes. I'm long-term bullish on oil, as I do believe oil is going to make a new all-time high at some point. And I do mean all-time high where it goes above the 2008 top, which was around 147. So I am very bullish oil long-term. In the short run, I don't like it. I think it has to pull back more. I'll tell you what, though, this gets down to around the $50 level, scoop it up with both hands and hold it for the long term.
Is that an if, or do you see it going to $50 on the charts, Nick? Because I do not expect it to go that low.
Yeah, I think there's a possibility it could get down there. And, there's been some significant breaks in oil recently that I was very surprised to see. And sometimes, as a chartist, I got to say, I was bullish on oil. And then when I see these breaks happen, I say, well, that's not a good sign. So, yeah, I think we could see it. We could see oil go down to 50 or even a pierce of 50. But that's your opportunity. That's your chance to get in there and hold oil for, the next couple of years probably.
So you don't foresee it going to negative $42 again anytime soon?
No, I don't see that this time. That was, Bill, to be honest, that was the first time I've ever experienced that in my life. So I've never seen anything quite like that. But it just goes to show you how human emotion controls the stock market, right? These markets can do crazy stuff. I mean, and I never in a million years thought that would happen or I would ever see something like that. And it occurred right in front of our eyes.
Yep. When you say you're long-term bullish oil, what's that mean? 3 to 5 years? Is that what you mean when you?
Yeah,
okay.
Exactly. Even 2 to 5 years. I think, like I said, I ultimately expect oil to make new all-time highs. If you go back in 2008, oil went up to 147 and change. It topped out there and it went down to 30. So when everybody loves something, that's when you got to jump off the train. When everybody hates it and it's in the gutter, so to speak, that's when you got to jump on the train and start to love it. But like I said, oil before that big run up, it could pull back, as low as $50 or even, the high 40s and then find bottom there. I don't see it going below that. And I think that would be what I call in the business a golden goose opportunity to really get involved in it there. In the meantime, it's chopping around. Some days it looks really strong. Some days it looks really weak. I don't, know what's going to happen in the intermediate term. I'll just take it as the pattern unravels.
What about nat gas? You said you're bullish nat gas.
Yeah, I love nat gas down here. I think this is where you want to be a buyer of nat gas. I still think we might, hang out at these lows here, even maybe go a little bit lower first. But I think nat gas is going to scream to the upside, and it's going to make new all-time highs too. And about
this year, Nick?
No, I don't think this year. But it'll make new highs in the coming years, But you'll get a definitive bottom this year. You'll get it actually in the next few months, I think, in nat gas, and then it will be off to the races. I own nat gas call options right now. I was in nat gas
on
as
UNG?
a swing trade on UNG. Yeah, on UNG. I did own UNG as a swing trade. I made a quick 5.5%. I got stopped out for a 5.5% loss, so it was a wash. But I am looking to get back into that play very soon.
Are you following the rage in the bull market in lithium stocks at all?
Yeah, I mean, I see it. I follow it. I track it. I haven't done anything in that area. I just still have a very hard time getting my head around this whole EV push that is going on. It's the most inefficient car ever made. It's exporting fossil fuels, and I don't even believe that fossil fuels are from fossils. So that should tell you something. This whole thing, it's just a bad science project.
Okay, base metals then, lead, zinc.
Yeah, I track them a little bit. They're not my primary trading vehicles, as you know. I like gold and silver. I like oil. I like nat gas, platinum every so often. I keep tabs of all of the metals and anything that goes into a battery nowadays. We have to look at. So yes, I watch it, but a lot of this stuff is artificial because you got these bills passed by these politicians. And, that pumps money into these things. But, listen, all you got to do is go back and look at the last time they pumped money into something called Solyndra. How did that work out?
What's your worst trade of the last 30 days?
It's probably nat gas. I got stopped out break even. That's probably my worst trade right now.
Then your best trade. So that's a break even. Your worst trade was a break even.
Yeah, the worst trade's a break even. My best two trades, I made some money on the cloud software names recently. I thought they would have a pretty good pop. I made some money on Tyson Foods. I sold that out at the peak. I thought that'd make a good pop. I had an option on Tyson earlier this year. I got some put options out there now that are basically flat. So, the year is still young. January is always a very, tricky month, especially if you go into this February time period where, I'm starting to get a little bit lean toward more towards the bearish side. This week is options expiration on Friday for the month of February. So it's more of a neutral week for me where I just let the markets do whatever they're going to do. It's like the Wild West out there. The institutions know where they need to place certain stocks to get them away from their popular strike price that have been put on by the small retail options traders. So it's a game of, game playing this week. Next week, we get back to some real trading.
So you have to be aware of the games that are played in the financial sector to be a good trader. Now, my question for you, Nick, I had this question, with the rise of artificial intelligence and even Elon Musk talking about it on Twitter and some of the things, whatever this Borg is putting out in terms of defining things and advising of things. What do you see as a trader, the growing role of artificial intelligence, combined with high frequency trading? How does that affect your business?
Well, we've had algorithmic trading here for quite a while, which has been actually good for us because I could read that stuff. I could see when the breakouts are going to occur. Generally, I could see when the breakdowns are going to occur. I could usually calculate where they're going to put a certain stock at a certain period of time. So the algorithms have been very good. The AI stuff is kind of new, and it's kind of a little bit frightening. And I'll tell you why, because just say you have an AI bot. Well, I'll give you a good example. The other last week, Google was doing a launch event for their AI product, and it gave the wrong answers. So that stock has really come under a lot of pressure because their AI bot was not able to really even give you the accurate picture. So let's just say, for instance, and I did hear Elon Musk give an example like this, where he said, well, let's say you ask AI to do something, and then all of a sudden they think they're going to help you, and they start a war, or they send missiles off, or something like that. And, if you think about it, we're now in the time period where the Terminator movie is coming to life, right? We have San Francisco basically with a police robot. I don't know if they've ever actually launched the project, but they have it done. You have AI basically out there now writing papers for people in colleges and in high schools, and it's all the rage right now. You can't turn the television on without hearing about AI. I think it's extremely dangerous. And I don't think AI, which is developed by man, is smarter than us. We're not, nobody's going to be smarter than us. We're created in God's image. So, this is just another falsehood, and it's dangerous. It's really dangerous, and I don't like it at all.
So you don't believe in what they call the singularity, where AI surpasses humanity?
No, not at all. And I think that's stupid. And it's just pure ignorance. There's an old saying out there that the student can never be greater than the teacher. And I'm going to stick with that. And this AI stuff, it's just dangerous. That's all they're doing, is just creating more danger. And you know what? They'll sell it to us as, oh, it's convenient. People have that Alexa in their house and it listens to everything they say and do. That is just purely dangerous. And, again, I'm not for it. I'm going to stay away from it as much as I can. But, Bill, that's my nature. That's who I am. So, some people are going to embrace it. But it is just outright dangerous of what's coming from this stuff.
Nick, thank you for your insights. You're a forthright New Yorker. You call it like you see it, whether the audience agrees with you or not. This is how you trade, and you've been able to make a significant amount of money doing it.
That's right. And thank you for having me. I don't try to sugarcoat anything. I just tell you how it is.
Absolutely. Your website is InTheMoneyStocks.com. Thanks for joining me, Nick.
Thank you, Bill.